Clearly, you track oil. We have seen massive moves in the last year. This slump in oil prices have caught many, many investors off guard. What has it meant for you?
So for our natural gas pipeline system, it's been nothing. But for our offshore drilling business, things were great 2 years ago, and today the industry is in the desert. That if a rig comes off a charter, there's basically no work for it. So utilization has come down dramatically. Cash flow has come down dramatically, not just for us, but for the entire industry.
How much of this did you anticipate, particularly the price of oil going to where it went?
I didn't anticipate oil going from $100 a barrel to $40 a barrel. And in fact, just this past Thanksgiving was really the one-year anniversary of the steep decline when OPEC had their meeting in 2014 and the Saudis decided not to cut production, and then the bottom fell out.
How far back does it have to come for you to really be successful in your exploration properties?
So I think that oil prices will come back to $65 to $70 a barrel because the world cannot produce enough oil to satisfy demand at prices below that. And so it's going to happen. In my opinion, it's much easier to forecast oil prices 2-3 years out than what it's going to do 2-3 months from now. But in my mind, it is inevitable that prices will get to that $65, $70 a barrel level in the next 2 years. Because otherwise, the world as a whole will be just short oil. Look, demand is growing by 1 million barrels a day, so we're at 95 million barrels, so next year demand will be 96 million barrels. Plus, there's depletion that also takes place. That's on the order of 5 or 6 million barrels a day. So just in order to stay even and accommodate that 1 million barrels of growth, the world has to find 6 million barrels a day of productive capacity. And at $40 a barrel, that exploration and development work is just not taking place. That's going to be able to satiate the demand in 2 and 3 years from now.
Well, clearly there are some distressed rig operators right now. Is this an opportunity for corporate M&A that you want to acquire these rigs, or potentially down the road would you look for new operators?
So we're in the offshore end of the market. Drilling rigs, a new drilling rig cost round numbers $600 million. To date, there have been no real transactions in those rigs. And the big question is just what are those rigs worth today?
What are they worth today?
Well, there haven't been any transactions. If you ask somebody a year ago, they would have said $600 million. Now, my guess is that the general perception is that those rigs are worth maybe $300 million. But I think there's a very, very good chance that the value of them will yet come down even further.
Matt, let's take a look at Diamond Offshore. Can you pull up the stock chart?
I have the chart, and I've actually put it up over the last 5 years compared to the S&P and the S&P Energy Sector Index. Now, obviously, the S&P is going to massively overperform because the energy sector has been tough. But this is the Energy Sector Index, and Diamond is really underperforming them. So I'm wondering if that's just because it's a specific problem to offshore drillers.
So I don't know exactly what's included and not included in the chart, but I can tell you from 2006 to 2014, Diamond Offshore, which currently trades at $22 or $23 a share, in that 9 or 10 year period, Diamond paid over $40 a share of dividends. So when there are good times, there's dramatic cash flow.